Good evening, traders. It's the weekend, which means you can't trade stocks, you can't trade Forex, and of course, the volume on crypto is too low to bother trading. Or is it? Let's have a look. So, today's movement has been a relatively small, roughly 1.6% down and 1.6% up, compared to other days like this, where we had well over 8%. Let's see how we could have traded today on Saturdays, which is obviously really, really useful for people who've got full-time jobs and who want to learn how to be basically financially independent and retire early. And this is a really good way to do it, to earn that little bit of cash extra on the weekend and let that cash build up over time and of course become a massive amount of cash. So what have we got? Obviously, we find ourselves on Saturday in the apex of this triangle that's been forming over the past few days. I'm going to show you how, using professional software, we could have shorted these highs and longed these lows. As we're going to recap how it is we could have traded these two amazing parallel channels for those of us out there who love scalping. Okay, I've jumped into our professional software and this is what we'd see. So I'm going to go with the easiest trade first and explain that one through to you. Now, we should have been immediately aware of this trade because as we've made a low here and we've made a higher low, we've got a divergence on our indicator where we've made a low round about here, and then as we follow it over, we realize we've got an even lower low on our indicator. At the same time, we've approached the bottom of this triangle, and let's have a look at this. This triangle has gone back at least 1, 2, 3, maybe 4 days in the making. So we can be quite certain that when we see price approach the bottom of this triangle at the same time as making a divergence on our oscillator and at the same time putting in these long wicks, we need to know that we need to take a really good look at what's going on inside these wicks, which is something you can't do using novice software like TradingView. So let's zoom in. And as we zoom in, what we see is we see that this grey box, our value area, full of traders, is stuck in the lows of the wicks well below the candle body. As you'll notice, no other candle like that around here is like it. The value area, this grey area, is well within the candle body and just isn't significant. It doesn't signify any kind of change in direction of price that's going to come along. However, here we've approached the bottom of our triangle, we've got our divergence, we've got our trap traders down in the wicks. We can zoom in further. We can see we've got these this aggressive selling coming in. All these aggressive sellers, these stacked selling imbalances, and as they come down, as price gets driven lower, that aggressive selling eventually teeters off, is not quite the same as the aggressive selling that was found over here, and so price snaps back in the opposite direction. And of course, we get this amazing trade, which could have been taken on for a good nearly 1%, or even more if you'd let it run out further. Remember, we're long in the lows and we're short in the highs of this triangle. So if we'd let it run out to the very top of this triangle, we could have got a good 1%. And then at this point, we need to start being wary. We need to start looking for price snapping back in the opposite direction and doing things like fake outs and breakouts. Now, this chart is the 5-minute chart, and on this 5-minute chart, like I say, we were easily able to see these trap traders, but coming up to the top of this, we can't really see them quite so well. There's clearly trap traders up in the highs of this wick, and yet price does continue up. The point of control gets just above this wick, and then this point of control fails to get above the next wick. So there is our evidence of trap traders. However, let me show you another setup for this template, which will show you even more clearly that you've got those trap traders up in the wick and give you a lot more confidence to take this trade. So here we are in the exact same portion of the chart, but what we've done is we've set the volume bars to each be 5 million contracts in volume. So what that means is every single candle represents 5 million contracts. And again, zooming in, what do we see up here? What we see is that all these other candles have got the value area nicely in the middle of the candle, apart from this one here where price does continue up. And then looking at this one, the 5 million contracts in this candle are stuck outside of the candle body, up in the wick. So we know that when we see our trap traders stuck up in the wick, while at the same time we've approached a level of what we suspect is going to be really good resistance, we know we can put in a really good short and have a really good chance of this not getting wicked through. So we know that when we see our trap traders stuck up in the wick of a candle right above this level of what we expect to be really good resistance, because so far throughout the last 3 or 4 days this level of resistance of this triangle has held true, we know we can put in a good short here with really high confidence. Similarly, what's happened over here is price has come up to the top of our triangle. Again, we expect that to be really good resistance. We find those trap traders stuck up in the highs of the wick, and at the same time, the top of our triangle coincides with the value area high of that day. So as we hit at midnight, and we can see that we've got trap traders here, if we've not already entered along, we can see this wick, we can see that we're on the value area high, and we can expect that this would be a really good long. However, if you missed that rejection from the top of our triangle at about midnight or 11 o'clock last night, then at about 4 o'clock in the morning, what you would have seen is a high and then a lower high, while at the same time a high and then a higher high. So we have a divergence being put in on our oscillator. We'd have seen that again in the presence of trap traders, this time on a 2 million volume candle chart. So as you can see, all of these candles are all equal to 2 million. So this isn't a 1 minute chart, a 2 minute chart, 5 or 10 minute chart. This is candles are printed only when the volume of the candles has surpassed 2 million. And we can see this divergence, we can see our trap traders, and we can see we've hit this price level that has been a level of resistance and then support, and has switched many times into being resistance, and then has acted as resistance here, and then has acted as a bit of support. So we're seeing this reaction, we're seeing these trap traders at this level in the presence of a divergence, and we can expect a really good trade. And it's great for if you miss this trade, you've got another option, another chance later on to get in on that trade. So as to the question of how do we trade these parallel channels, well, let's take a look again on professional software. So to confirm a trend line, we need at least 2 touches, which means we can see a touch here, and now at this point we can start to be quite confident that this trend line that we're drawing in is something that might be rejected from. Again, let's not go longing or shorting blindly off trend lines. Let's do it in the presence of divergences and, most importantly, in the presence of trap traders. So in the end, this parallel channel ended up looking something like that. And what could we have seen? Zooming in, we see price making higher highs while at the same time making lower highs on the oscillator. And here we see our evidence of trap traders way up in the wick with a point of control up in the wick, and at that point was a really good point to put in a short. With, in this case, because it's a parallel channel, because the volume isn't that great, we're probably gonna go for basically aiming for the bottom of the channel, and we're gonna take a smaller profit to loss ratio. We're not gonna go for like a 2 or 3 or 4. We'll stick to 1.6. Okay. Similarly, over here, we've got price making higher lows, while at the same time our oscillator makes lower lows. So again, a divergence in the presence of these trap traders, in the presence of a line of support. And so again, what we can do is we can put in a long position. Once you've got your parallel channel drawn in, you can be a bit more confident, and you could maybe start taking trades every time you see your wicks rejecting off the top of the channel or from the bottom of the channel. And again, we see a lower low being put in here and a higher low being put in on our indicator in the presence of trap traders, and amazingly also on the bottom of our larger trend triangle. Coming up to this parallel channel, again, easy trade, a high, an even higher high, while at the same time we have a high and a slightly lower high, but we have our presence of trap traders up in this wick. So again, we could put a nice scalping short in there. Now, if you really enjoy scalping on the much finer time scales, such as a minute, and I think you have to pay in order to be able to see the 1 minute chart on TradingView, well, with this professional software, it's absolutely free for crypto, and you can see down to the 1 second range. But looking here on the minute chart, we can zoom in. And we can see again how we've made pretty much an ever so slightly lower high, while at the same time, we've made an ever so slightly higher high on our oscillator in the presence of trap traders. So if you are a 1 minute scalper, this is a great way that you could have gone short on here. And as you can see, this candle here had slightly more volume than the candles around it. So again, higher volume candles in the presence of trap traders, in the presence of support and resistance, that's where we make our trades. Over here, we can see a series of higher highs, while at the same time, our oscillator is making lower highs. And again, we have our trap traders stuck up in the wick. We have evidence of aggressive buying up in the highs of the wick. And we see price come tumbling down. Similarly, over here, we've already got our parallel channel well established. And what do we see? In the presence of a higher high, we have an oscillator making a lower high, while we have our trap traders and our aggressive buying and our point of control all above the candle, again suggesting price is going to come down. So if you've recently realized that TradingView charts like this one that are absolutely packed with useless indicators are doing nothing for your trading journey, and you've realized you want to start using professional trading software in order to get professional results, well then like and subscribe and head over to profiretrading.com where you can learn more. Thanks very much.